Hello, welcome to day 2 of my trading journal to help me with my understanding and development of learning ICT concepts. So just keep that in mind. We're in a demo environment, and it obviously goes without saying it's not financial advice. So let's just recap with what we did last time. We had a long trade here in the morning, and then we went through a trade where we got stopped out, obviously back testing. And just to make a few corrections from yesterday, I think my understanding of breakers was a little bit flawed. Rather than a breaker being a single level, I think I said the open of the candle that made the high. We're actually looking at breakers as the last series of up-close candles leading up to that high. In other words, the last up leg in price delivery. So we just go and make that distinction. Go ahead and remove what we wrote before. I've also updated the description here under breakers to reflect that the last up leg in price that forms the high determines the breaker. And so I was looking at this trade that didn't work out, and I noticed it's a pretty common pattern from all of my back testing so far, and especially when we're in a live environment like this, always seems to happen. You always seem to get stopped out, sometimes almost within just a couple of pips of where your stop loss is, and then as soon as it stops you out, price just takes off without you. And then of course once you get stopped out, and then you're arguing, I should have had a larger stop loss, I should just get in again. But then of course, say we did do that, we got stopped out, and then we entered in again once we saw the green candles, just get stopped out. Might get lucky, but more times than not you end up just losing. And so I was doing some more research into strategies from ICT that focus around utilizing breaker blocks. I've been struggling to understand breaker blocks for the longest time, so by forcing myself to try and teach them, it will hopefully help me understand them. But the idea is, if we go and look at this breaker block here, hopefully it will help illustrate. So basically, as we covered, it's a low, a high, then a lower low. The breaker block is the last up leg in price leading up to the high. And then once price goes above the breaker here, it comes back down, comes very close to the mean threshold of the breaker, but then uses it sort of like a platform to go into a rally. That happens at 8:30, which is when a lot of liquidity comes into the market. And of course, that's also where our order block is as well. So maybe if we were just doing order blocks, that's what would stand out most to us. There's also, I guess, an inversion fair value gap here. I mean, there's lots of different concepts that we could start identifying, but I've heard that the breaker is one of the more reliable ways to try and figure out where actual support is. Once it leaves here, this breaker sort of acts as a support before price goes off. So if we can really internalize that and use that, maybe we can replay the PM session with this new strategy and see if there's a better approach, because I'm still working stuff out. I'm sure next time I will have changed some stuff here, but I went through the breakers again, and I've put together a strategy that's more geared towards a PM session. So let's just without further ado stop wasting time and go through this. So we've got number 1, buy side liquidity taken, so that's pretty much the same. Buy side liquidity, we're looking for equal lows that stand out. Writing these down on the chart is definitely one of the best sort of approaches to take the, to avoid panic buying. Number 2, market structure break. Now, what I mean here is just a break in market structure, but I wanted to get it to fit onto the screen neatly. So, rather, very similar to a market structure shift. I've just written market structure break, but that's not really a recognized term. So when you see that, just know I'm referring to break of market structure, and it's very similar to a market structure shift, but this time it actually has to close above a swing high as opposed to just wicking above it. So we actually need some solid confirmation, and we've got 3 highs here. I guess all of them are swing highs, but I'm going to go with this one here. Of the 3, it's the highest, so if price closes above there, that'll give us the strongest signal. So we just have to sit here and wait now. We've just entered the PM session, and we're not even going to look at the next step until we get some kind of move. Okay, that's a wick. Okay, there we go. We've closed above that last sort of significant level. So all that is just a sign that the market might be changing direction or coming out of this consolidation. It's not really a confirmation. So market structure break. Next, we need to identify the breaker block, which is what this whole strategy is based around. So we need low high and then a lower low. Now we're going to be excluding, when we say a lower low, we're not going to be looking for a low that comes beneath here, because this was the sweep on liquidity. So if price came down here to take out all the stops and created that low, the idea is, well, price isn't going to go down there again. It's already collected the liquidity, so we can just say we want a low that's lower than here. So we've got this low, which is lower than that low. That's why it's a low. The definition of a low. Then it goes and creates a high, which is our break of structure. Now we're waiting for a lower low, and right there, let's just go forward one more candle. Yeah, that's definitely, I mean, it even came down and tapped the liquidity again. So yeah, we've got our low, our high, and our lower low. And then we need to determine which part of this is the breaker block. And yesterday my understanding was that it would be the open of the candle that formed the high, but that's not really correct. It's the last up leg in price that forms the high. In other words, the final consecutive series of up close candles, including their wicks, that forms our breaker block, an area that we hope will become support for another price rally. Then we need to figure out a way to enter this. The idea is price is going to come up, then it's going to come back down, and that's where we want to enter. But this is where the rules allow for a little bit of coloring outside of the lines. One way to do it might be to just anticipate that that this was the sweep on liquidity, and if price comes back down here again, we could just enter a buy position here. With the, that's a more advanced, a bit more risky. A more safe option would be to wait until price leaves the breaker block and then comes back down to retest it. I'm going for the middle option, which would be using an inversion fair value gap as a confirmation that price wants to go higher. So the idea of this gap is it's sort of like a little void where there was trading, but there wasn't really much opportunity to get, I don't know, buy or sell orders properly filled or something in this little gap. Not the best explanation, but the idea is that, well, price is going to want to come back to this level just to sort of rebalance everything. Inversion fair value gap. And if it does, one of two things is going to happen. Either it's going to come back here just to, balance out this price action, and then it's going to carry on going down. If it comes back up to this gap here and then shoots right through it, closes above it, that's the confirmation we need in order to use it as an entry. So we're going to go forward. Okay, so price is wicked into it. That's that's not enough to just enter here. If we'd entered here, price would have come back down, stopped us out. So we really need. Okay, what have we got here? Yeah, we've got price closing above it, and just to simulate us maybe hesitating a little bit, I'll do one more candle. So price comes back into it again. So if we decided that this is our entry, it'd be okay to just sort of like enter the position. But I'm actually going to be following the rules very closely this time, so I'm not going to be going off script. So in order to actually enter here, we need the entry to be within a discount, and in order to do that, it's very similar to last time, except this time it's the high and low of the breaker, not the high and low of the price leg, but the high and the low of the breaker, which is actually, this is the low, this is the high that created our breaker. I know our breaker is just the last up leg in price, but for this we're using this as our projection. We want to enter our position at the fair value gap. There's a risk here because we hesitated. There's a risk that the next candle might be green and we might just have missed this. And if that's the case, so that's just what happens. It would be very frustrating to then sit there and watch price go off without us. But so as I've sort of decided, 12 pips is kind of the risk I'm comfortable with. And I know some theories would be, oh, it must be at the last low, but I'm not comfortable with that much risk. So I've created another rule that says the stop loss must be below the breaker, but I can't move the stop loss down there without increasing it. So what I'm actually going to have to do is actually move the entry down so that the stop loss gets to where I need it to be, which is now it's going to decrease the chances of our order getting filled, but in order to cover the risk, because price could come back down, test this gap again, it could still do a little bit of, we don't know what it's going to do really, so we're going to have to just go with that. We can get rid of this now. So that's our trade set up. Ideally we would have probably entered here, but hopefully we still get filled. Luckily we do. Could have entered on the candle before, that would have been fine, but at least we're in the trade. Okay, so we've got some slightly different trade invalidated if statements. So let's just start going forward and see how this pans out. Okay, so price has now left the breaker, so we're actually going to create a mean threshold here using the ruler. I'm just going to draw this line to identify the mean threshold of the breaker. So it's okay for price to come back down, maybe come into it a little bit more, but if price starts coming back down into the breaker below the mean threshold, that's going to start invalidating the whole thing. So I've just got that there, and if that does happen, we'll be exiting the position. But let's just see how this goes. Okay, so price coming back down. It's made a wick that it's got within maybe say 1 pip of testing the breaker, which is quite typical to see. And it looks like it's going to use this breaker as support, which is a nice confirmation. Okay, so we sit in this trade for a little bit longer. Each click is 3 minutes, so this is kind of like, this is adding up. Now we're getting close to 4 p.m, the end of the New York session. So if I haven't got if it hasn't reached my profit target by 4, I'm just going to exit this trade, because I just do not want to be still in a trade after 4. Yeah, at the moment I'm kind of looking at this, I'm like, maybe it will come back down, maybe it will reach that target, but I'm actually going to, I'll make a note of where the target was. And then I'm just going to enter the trade, exit the trade on a high note here, because the idea is we wouldn't spend the whole day at the chart. Okay, and then it's just, we're out of the trade now, so taking the pressure off. It would still just be interesting to see if the high and low projection of the breaker block still becomes true. Nice to see that, so kind of start going into that overnight session, and it looks like if we wait long enough. Okay, so price does actually go there. But obviously we're out of here in about 30 minutes as opposed to sitting here for the next 3 hours just watching price tick up and down. So okay, so obviously I'm going to have to test this more. This is, still kind of early development, but this is, based on ICT, so it's not like I'm just making all this stuff up. It's just to try and reinforce my own understanding and see if I can find a system that works well. So yeah, we'll leave it there for now. Let me know what you think. Thanks.